This new liquidity model is the first of its kind. It's the first time it's ever been done.
It's the first place where on-chain flows will be connected to traditional markets.
What our traders should expect with this new upgrade is liquidity limits that scale dynamically with the trader demand. No trader should be running into issues to scale their positions on Ostium into 9 figures across most of our main assets. So they should expect fills and execution that is extremely competitive.
This novel infrastructure is being powered by a network of institutional partners, including Jump, the co-leader of our Series A.
The most competitive market makers in the RWA markets, right, are not on-chain. They're in the traditional markets, and therefore we decided to meet them where they are.
The existing system is starting from like a pure on-chain basis. We then have this on-chain system that allows us to have the capital and USDC move on-chain and enable instant settlement and self-custody and all the things that matter from a blockchain perspective.
The first one was data and the oracle that we built in-house to pipe that data from the traditional markets to the on-chain markets. The second layer to this is liquidity, and that's the one that gets switched on. Beforehand, the pool that we have took that risk entirely. With the new system, the pool will be basically agnostic to those directional flows and will act as an intraday settlement layer.
The protocol really took off like a year ago.
We've done $50 billion in volume, upwards of $33 million in revenue, and we're very close to reaching our 1 million trade mark.
Okay, largest trade, $36.5 million long. Single shot trade. It's bringing true the vision that we've had since day one when we started the company out of my dorm room to bring the liquidity of the real markets on chain.
In the last 6 months, the engineering team has grown very substantially. We were 8 of us back in October, and we're now 20 engineers full-time across infrastructure, DeFi, risk, and smart contracts. The hardest part at a technical level was the fact that the entire traditional brokerage infrastructure is built on FIX, a messaging protocol. We had to ensure that we kept and built a very low latency system while translating all the messages from the subgraph on-chain into messages that have the exact same standards by the order instructions that exist in traditional markets. The smart contracts, the oracle, and the hedging system, there's this triad system that needs to be not only in full coordination with each other, the system needs to be blazing fast, and trading execution needs to occur under 100 milliseconds.
More new markets, better execution, dynamic liquidity that adjusts open interest naturally based on the liquidity constraints, and then this new dual layer where we ultimately split intraday settlement from directional flow hedging. The problem really that Ostium is solving is making the most liquid and most desirable to trade global markets globally accessible with exceptional liquidity, institutional level liquidity to anyone around the world.
Ostium's primary mission is being a gateway to global markets for anyone in the world with a wallet. In most places around the world, it is terribly hard to have access reliably to global markets.
We are one step closer today to serving the 10 trillion monthly volume global CFD and FX market.